Welcome to this very special episode of Budget Hotline. Over the next 2 weeks, we're going to be answering all of your questions in the run-up to the budget every day at 6:30 p.m. right here on ET Now. Our phone number is at the bottom of your screen. We're talking about tax this evening, so if you have any questions, whether it has to do with the budget or not, pick up the phone and call us. Joining me in the studio right now, Mayur Shah, partner tax at EY. Also through the course of the show, Suresh Surana will also join us. He's a tax expert. Mayur, before we get started, we already have, I understand our phones are ringing, but I wanted to ask you, obviously big expectations of larger tax cuts. Are you expecting a change in the slab? It happened last year, so normally it doesn't happen every consecutive year. But do you think we have a case this year?
Yeah, we have a case this year for a slab change. The reason being because of demonetization, lots of money which has come in, lots of compliance will increase.
Yes.
And I think to encourage people to do more compliance and to be in line with the law, I think there should be increase in the slab rates.
So increase in the slab rates, and we're looking at it on our screen. The lowest slab rate is 2.5 lakh rupees, which means that anybody who makes less than 2.5 lakh rupees pays no tax at all, and whatever you make between 2.5 to 5 lakh rupees, you pay 10% tax on it. So are you expecting a change in the bottommost slab or the topmost slab?
I think at all levels slab would change.
Okay.
So my expectation is that from 2.5 lakh it should go to 3.5 to 4 lakh rupees, and on slab rate should change for 20% of slab, which should go up to 10 lakhs. So between 5 and 10, person would pay 20%, and above, then up to 15 lakhs, it should go up.
So I mean, just that would be complicated for our viewers, but just to explain to them, that's a saving of about 10 or 15,000 rupees if you make. If it moves from 2.5 to 3.5, that's 10,000 rupees you will save. If it moves to 4 lakh rupees, you'll save about 15,000 rupees. But of course, right here on ET Now, we'll tell you what your savings will be when it is announced by the Finance Minister. Suresh Surana also joins us now. Suresh, we've been talking about the fact that the ATC deduction of 1.5 lakh rupees, although it was increased last year, and the home loan deduction is archaic and it's completely out of touch with inflation. Can we expect an increase in those levels as well?
Yes, so I think as far as the deduction under section 80C is concerned, and you also have 80CCC and 80CCD, which are all combined limit of 1.5 lakhs. Plus there is an additional limit of 50,000 rupees for National Pension Scheme.
Yes.
I see that maybe they can aggregate all this, because right now it is too complex for people. There are too many sections and too many. So if they aggregate all this 80C, 80CCC and 80CCD, and make an aggregate limit of 2 lakhs rupees. Also, it is a fact that investment needs to pick up. I mean, the whole investment cycle in India is not really picking up. As far as the deduction for the interest on housing loan is concerned, which is rupees 2 lakhs, I frankly don't see it going up, because we should not forget that the interest rates have come down actually, and are also further expected to come down.
I know Mayur disagrees with you. Mayur, we talked about the fact that the real estate industry is in a fair amount of distress right now, and there's a need to encourage people to buy homes. So do you agree that you don't expect the interest deduction to go up?
Yeah, I believe interest deduction should go up, because this limit of 1.5 lakh to 2 lakh has been from quite a long time, and even if whatever increase has happened, does not match with the inflation which has been there. So I expect that it should increase to 2.5 to 3 lakhs. Maybe if we are blessed appropriately, then it could go up to 5 lakhs as well.
Well, like they say in Hindi, aapke muh mein ghee shakkar. If we are blessed appropriately, I hope the finance minister is listening to us. There are lots of people in India who want to buy homes, and the prices of homes in our city are nowhere near the 2 lakh rupee, deduction that is being offered to us. It's, it's a fraction of what's being paid on home loans. But let's take a few questions. Roop Chand has written in to us from Mumbai. He sent us an email. He said he's 57 years old, he's retired, and he's only invested in bank fixed deposits, and he only has an interest income from these. He pays tax at 20 or 30%, and he realizes that the tax outgoing will steadily erode his savings, making him vulnerable to inflation. He wants to know what he should do. Now, Suresh, I'll take this question to you. There are a lot of people in the country who are senior citizens who are making an interest income. Do you expect relief for them in this budget? And if not, what advice would you give someone who's relying completely on interest income right now?
So senior citizens, right now the exemption is up to rupees 3 lakhs. which I think in line with the, I mean, there is an expectation that the basic exemption limit will definitely go up from 2.5 lakhs to maybe 3 lakhs, maybe even 3.5 lakhs. So similarly, correspondingly, I do expect that the senior citizens also exemption limit should go up. That is one thing. Second thing is that there is a slightly higher interest rate available on some of the senior, citizen deposit scheme. So one must avail of that. Also, one should look at, I think, as far as investment in equities is concerned, because right now the equity markets are fairly low, and I think the outlook still continues to be quite encouraging. So one of the, again, good hedge against inflation is the equities. The fixed income instruments, I think interest rates definitely I don't see them going up much now. So I think that could be one, maybe a part of the portfolio can be put in some equities. Remaining, I think whatever is there are senior citizen, a sort of deposit scheme which give you slightly higher interest rates. Hopefully the basic exemption limit goes up. Already for the super senior citizens, those who are 80 years, there is a limit of 5 lakhs.
Right.
So maybe they consolidate the limit for senior citizens and maybe make it 5 lakhs for both, hopefully.
Mayur, what advice would you give someone who's paying a lot of tax right now on their interest income, and obviously that makes them, like he rightly pointed out, like our viewer pointed out, makes them vulnerable then to inflation. So if they want to reduce their tax outgo, what ideally should they be doing?
I think as rightly Suresh has said, one has to change his investment mix. Try and see which are the equity investment or other investment can be made which can run tax free. If you look at investment in equity market held for more than a year would result into no tax at all. So something like that, or investing in a growth mutual fund, which is a kind of a safe bet in terms of making those investments. So one should look at investing in such securities which will make them non-taxable.
Well, I'm going to come back to the equity investments because it's likely not to be as tax-free as we have it right now. George Samuel has written in from Kerala. He's also a senior citizen. He plans to reduce his real estate holding by selling a piece of land in a township area that he'd inherited from his parents. He said it's being valued at 1 crore rupees. Now, if the sale is inherited, will it be subject to capital gains tax? Will he have to pay it? What financial instruments are available to invest the proceeds and to get relief? So obviously in India we have no inheritance tax. So when you inherit a piece of property or anything else from your parents, you don't have to pay tax on it. But you do have to pay tax on it when you sell that piece of property. Suresh, so he is going to have to pay tax on it, but how will that tax be calculated? From the day he inherited it or from the day it was bought by his parents?
No, so basically fortunately here it will be the period of holding will be counted from the period when his whenever his father or from the person whom is inheriting, he has purchased the property. So let's say if he purchased it, before 1981, for example, then he can take the cost as on 1481 and do the indexation. Now the indexation will almost take it to 10 times the 1st April 1981 so valuation. So one thing is that, and therefore it will become a long-term capital gain. So one is the benefit of indexation due to the long-term capital gain. The second is there is a lower rate of tax. So for any long-term capital gain, the tax rate will be 20%. Third thing is that he can claim all the exemptions available which would have been available had he himself owned the property for all this period. So let's say for example, if he is reinvesting in another residential house, he will get the exemption under section 54.
Yes.
If he wants to invest in bonds, so 54 EC exemption is available. So I mean he will, and then if he wants to take benefit of ATC and all those things which are normally available to anybody. So I think he has to really carefully plan on a 1 crore property. I mean, hopefully with the indexation and the period of holding, one should be able to get a reasonable deduction and invest the balance amount in either house property or bonds or tax saving instruments.
All right. So here's to put it very quickly in a nutshell: the money that the property that you inherit, if you decide to sell it, yes, you will be subject to long-term capital gains tax. You have to get a tax consultant to look at your papers and actually calculate how much tax that you are, actually liable to pay. Once you do that, there are two ways to avoid or to, avoid paying that tax. One is to reinvest the gains, so that gain that has been calculated in another residential home. You obviously don't want to do that because you want to reduce your real estate exposure. So the way to do that then would be to invest in either the REC or the Rural Electrification Bonds or the National Highways Authority bonds, both of which your tax consultant will be able to help you with. Lohit, I'm told, is on the phone line from Bangalore. And for those of our viewers watching at home, our phone line or number is at the bottom of your screen. So if you have a question for us, pick up the phone and call us. Lohit, what's your question?
Yeah, my question is that I'm a salaried individual and my annual CTC is 3,10,000. So I know that my taxable amount is 60,000. But I do pay a car loan and as well as I pay rent for my home. So I just want to understand what will be my tax deduction and what are the measures that I should take if I could save or if I could show it on my proof of investment or things like that.
Well, obviously the car loan is not tax deductible at all, Mayur, but the house rent that he's paying, there is a house rent allowance, HRA, that we call, as we call it. He can use that and bring down some of his tax outgo.
Absolutely right. He would be able to claim exemption from house rent allowance, so that will bring down the taxable salary and it may go out of tax net. Other aspect which he should consider, that if he is subject to PF and other things, then the deductions under 8IC would also be available. So my guess is that given that his salary is only 3 lakh plus, I think he should be able to save, he should be out from the tax net and he would be below taxable limit then. Provided, he is able to claim HRA exemption plus 8IC deductions, I think it would be possible then.
In fact, if he just considers his HRA exemptions and he's only paying 60,000 rupees tax, he should be able to bring himself. So you have to, from 1.3 lakh rupees, you have to bring yourself down to 2.5 lakh rupees. So 60,000 rupees either needs to go in house rent or you need to invest that money. Suresh?
If I may add on to that,
Yes.
so even if your employer is not giving you house rent allowance, there is a deduction available under section 80GG. So whereby if you are paying more than 10% of your salary as the rent, you are allowed to claim deduction up to 25% of your salary and up to subject to maximum of 60,000 rupees a year.
That's right.
So even if there is no house rent allowance by the employer, because sometimes employer may not change his salary structure, you can still claim 80GG deduction. And second thing is that there is a relief under section 87A of, which is up to 5,000 rupees of tax rebate is available from the tax payable. So which means effectively if you are having only 3,10,000 rupees income and if there is no other material income, your income will be below 5 lakhs. And on 3,10,000 you will have just a tax of 6,000 rupees on which you will be able to claim 5,000 rupees as tax rebate also.
All right. And of course, if you're lucky, like Mayur was telling us, if the gods are kind on us and the finance ministry is kind this year, then we'll probably have an increase in the bottom slab and then you might not have to pay tax at all. Reena is on the phone line from Mumbai. Reena, go ahead. What's your question?
Yeah, hi. Good evening.
Good evening.
I'd like to know if service tax is applicable on tuition teachers for Montessori institutions or preschool teacher training institutions, for Montessori level, kindergarten level. What is the service tax there, or whether it is applicable or not?
But Reena, if the teacher in question, if you are the teacher in question, are you being paid a salary? Or do you get paid on a freelance basis?
Tuition teachers, what happens, you obviously go to their houses or, kids come to your house and sometimes they pay in check or small amounts in cash or something like that. So how do we go about that? We have to do cash deposits in banks and stuff like that. Is there a service tax applicable? What is it?
Well, Mayur, service tax will obviously be applicable now.
So I don't think, because there is a basic threshold for, at least under the current Service Tax Act, that if a person is having a service fee below certain limit,
what is
will
the
not
limit?
be the limit. If my recollection is right, it is around 8 lakhs.
Okay.
So to that extent, they don't have to pay any service tax as such, and I think even registration is not mandatory. But if the moment it exceeds that, then certainly they might have to get registered themselves with the Service Tax Authority.
Yes.
If I may just add on to that.
Yes.
So basically, right now, as there is only if your income is exceeding 10 lakh rupees, then you need to pay service tax, and registration requirement is if it is 9 lakhs. And now the good news is that under GST, this limit will be increased to 20 lakh rupees. So if GST comes, which now is being
If-
targeted
if-
1st July,
if-
yeah, if it comes,
If it comes,
then
but
I
if
think-
and when GST comes
So-
out, that will change. But for the time being, she should know, of course, that if she's making altogether, Reena, from the tuitions that you're giving, if you're making more than 9 lakh rupees for the year, depositing into your bank more than 9 lakh rupees for the year, then you're going to have to pay, you would have to register yourself. If it crosses 10 lakh rupees for the year, then you will have to start paying service tax. You keep an eye on that amount. Suresh, is there any option to bring down the tax outgo on service tax? Or did she have to then, once she crosses that limit, pay?
Unfortunately, service tax is just on the total revenue. So the only thing is if, and of course she has to see for the financial year. So if it is getting spread into 2 years, so let's say right now if she is, if she is collecting for the whole year, it can be, she can see that if it can be in a financial year less than 10 lakh rupees. That's the only thing. Or maybe if there is another family member who is also doing tuition, they can split
it among them,
Yeah.
between themselves. Okay, before we take our next call, I just want to ask Mayur this question. Mayur, obviously, there was something that made us all nervous, which was a statement from the Prime Minister that then got rolled back the next day about the possibility of long-term capital gains tax on equity. Yeah. What is the likelihood? Have you done that, that study, I'm sure, within EY? What is the likelihood that that might actually happen?
So we are of the view that I don't think they would change any tax rate for capital gains. I think what I anticipate is that there could be an alignment of holding period as far as long term vis-a-vis short term is concerned. If you look at other securities, somewhere unlisted shares would need to be held for 2 years, whereas listed security needs to be held for 1 year. So they may try and align those things.
Okay.
But I don't see any change in the tax rate or anything.
Okay.
Also,
last year they suddenly surprised us by changing the holding period for debt funds to 3 years, and it was retrospective. So anybody who already made an investment had to hold it for 3 years. Is there a likelihood that will happen with equity as well?
So as I was saying, for if they align it to 2 years, then certainly for listed securities, the period of holding may go from 1 year to 2 years. So, and that could be that could create an impact on capital gain taxation, because currently, long-term capital gain on listed securities is 0. Whereas if it becomes short-term, then it may be subject to tax at the rate of 15%. So that will be the arbitrage one has to look for.
And Suresh, tell me this now, for a lot of our viewers who have running SIPs and mutual funds, if this rule changes during the budget and it suddenly becomes 2 years or 3 years, whatever it is the ministry might decide, how does that impact our SIP? Should we be worried?
No, so I personally think that the government really wants, if you see last maybe 7-8 years, a lot of investment has gone into real estate and gold. And the government also wants to promote investment back into equity market. So I am not really, and also into mutual fund units and also more into the the economic mainstream. So I think I personally do not expect that right now they want to do anything which is more disruptive, because already the GDP growth rate also there is a forecast it has come down from 7.6 to 6.6% as per the World Bank. I think you have to really promote investment into equities. Right now I don't think they can afford to do anything which will disrupt the capital markets.
Or which will spook the markets right now. So there's a divided panel on whether or not we're expecting that change. But we'll keep a close eye on it for you right here at ET Now. But Ibrahim, in the meantime, is on the phone line from Mumbai. Ibrahim, what's your question?
My name is Abraham, not Ibrahim, Abraham.
All right, Abraham. Thank you for calling us. What's your question? Good evening to you.
Yeah, I am a retired person. I was NRI for 27 years, but last 2 years I am sitting in the house. My equity dividend is around 15 lakhs. And out of that is 8 lakhs through mutual funds, UTI. I want to know what is my tax. I have no other source of income.
Okay.
I have no other source of income. I have some FDs which are all maturing after 1st April 2017.
Okay, Abraham, tell me this. You said you're retired, but are you a senior citizen?
I am a senior citizen. My age is now 65.
65. All right. Mayur, he will have a tax outgo. He's making 15 lakh rupees a year on, on income.
Dividend. Yeah, so he would be subject to tax on this except one point which one needs to really note is that dividend was exempt up till now, but from this year onwards, any dividend which is received in excess of 10 lakhs will suffer an additional tax of 10%, which was not there earlier. So one has to pay that tax as well. So that will be the outgo from income tax point of view. And I think that is what from the dividend standpoint. I could not hear the other aspect of other income.
No, he said there is no other income. This is the only income he
Okay.
has. Suresh, do you have any advice for him?
No, so according to me, I think it will be only a 10% tax since his income is exceeding more than 10 lakh rupees from dividends. Now if there is a way in which, like for example, if you are giving, let's say, gift to your children, so spouse there may be clubbing provision, but let's say if you are giving to your children who are major, then there is no clubbing provision. And if your dividend income comes below 10 lakh rupees, then there is no tax. But otherwise also you will not be paying the normal tax rate. You will be only paying 10% tax. So it is much lesser than what you would imagine normally.
All right. So 10% tax on dividend income that you're getting. Rajendra Kumar is also on the phone line from Delhi. Rajendra, go ahead.
Yeah. Good evening, sir. Good evening, ma'am.
Good evening.
Good evening.
Yeah, I am a salaried individual who is active in equity markets. I usually trade in cash markets. I want to know if I start trading in derivative markets, that is in options or futures, how the tax turnover is calculated, how the tax calculation is done. I am currently filing my returns in equity markets, only cash markets.
Suresh, do you want to answer that question?
Yeah, so derivative, now it is very clear that any income from derivative instrument will be treated as a business income. It will not be speculative, but it will be treated as a business income. And so therefore you will be, it will be part of your normal income. If you make any loss in other instrument, you can set off in the same year. Now you will have to really see what slabs you are getting into in terms of the various slabs applicability and normal deduction, ATC, etc., whatever you can claim. So I think that is what, if your aggregate turnover exceeds more than 1 crore, then the tax audit becomes applicable. Because as a person who is carrying on any activity which is in the nature of business or adventure in the nature of trade, so the tax audit would become applicable. I mean, I think, and remaining you can still continue to hold your equity portfolio. That need not be getting impacted by this. It is very clear by CBDT circular that it is for you to decide. So just because you are doing derivative instrument does not mean that your normal equity investment will be reclassified. You will continue to enjoy long-term capital gain exemption or the, in terms of short-term capital gain, the lower tax rate. So that will not get disturbed.
All right. Vinayak is also on the phone line from Thane. Vinayak, good evening. Go ahead. What's your question?
A very senior citizen, more than 80 years old.
Yes, sir.
And all my income is from bank interest deposit.
Okay.
It is slightly more than the limit.
Hmm.
I am subjected to TDS. So unnecessarily, suppose the limit is 5 lakhs. So I have to claim a refund of 50,000 from the income tax department. I don't know when it will be received. So whether there will be any proposal in the coming budget regarding exempting the senior citizens from TDS provision?
That's an excellent question. Mayur, it's very painful, and this must be noted for our senior citizens, most of whom hold fixed deposits, that they have TDS deducted from their fixed deposits. Then they have to take that, go and claim it as a reimbursement back from the government. A lot of times, although that system has become more efficient, it still takes some time to hit their account. Is there a possibility that the government might remove TDS for seniors or super seniors?
So currently, the way it is that if you sign a prescribed form and give it to the bankers or to the institution, whoever is paying the interest, they are then not obliged to withhold any taxes from such interest payments. Currently, I don't see any proposal being there, or don't see that such kind of benefit will be extended. But I think yes, one has to make a request for such things, and they may come out with some circular to exempt senior citizen from there.
In fact, if there's anyone from the ministry listening right now, this is of course something that senior citizens will tremendously appreciate your help on the paperwork. That if we can limit the paperwork that our seniors have to do when it comes to something as simple as fixed deposits, we'll really be helping them out. Suresh, if you could just take the gentleman one more time through the process. They have to get a form, they have to sign it and give a letter to the bank saying that, you know what, my total income is lower than the tax slab. So I don't come under a tax, tax bracket. Please don't deduct my TDS. Is that the way it has to be done?
Yeah, so that is exactly the way it has to be done. But as was pointed out also, that is only applicable if your income is below taxable. Now, in some cases, the income may be partly taxable, in which case person cannot give declaration, and therefore either one option would be for him to split the deposit in such a manner that at least only the tax withholding is to the extent of the to the extent of final tax liability.
Sure.
The second point is that the government did a very good change I think about 2 years back, when the senior citizens have been exempted from paying the advance tax. So I think it's a very valid kind of expectation that similarly TDS also, if they can exempt the senior citizens, particularly on the fixed income instruments, because a lot of them depend upon that.
Yeah, just to add to what he said is that in case where income is subject to tax and you can't give that declaration,
yes,
one can always request tax officer to issue a lower rate of certificate, whereby once that certificate is submitted to the banker will be obliged only to deduct tax at a lower rate and not at a higher rate. So that means that there is no refund situation which would arise. And for senior citizen, we have been experiencing that tax officer are quite lenient and they issue.
And understanding. That's a good thing. In fact, I want to take one more question before we run out of time. Dina is on the phone line from Chennai. Dina, what's your question? Go ahead.
Actually, I have two doubts, madam.
Yes.
One is, actually, I have touched with my PAN card with my company. They are deducting.
Okay.
Is it mandatory? Do I need to file additional income tax? I mean, I don't have any other income tax. Is it mandatory me to file additional income tax, madam?
What is your salary right now, annual, Dina?
Actually, I'm a salesperson. My salary is 3.2 is my CTC. With that, I'm getting petrol allowance, other convenience. It will be added, one more lakh will be added, madam.
Okay.
Do I need to file income tax? So that is why I'm having this doubt, madam.
Do you need to file your returns? Suresh, he has to file his returns. He's making 4.2 lakh rupees a year.
Yeah, in case your gross total income, again, many people misunderstand this. They calculate, they think only if their taxable income is below 2.5 lakhs, they don't need to file. But actually, even before 80C deduction, only when it is below 2.5 lakhs, then you are not required to file the return. So let's say, for example, you have 3 lakhs rupees of income and you claim 80C deduction of 1.5 lakh rupees. You still have to file the return.
You still have to file. If you make more than 2.5 lakh rupees a year, you have to file your returns, whatever that may be. Even if you've managed through your deductions to not pay any tax, you still have to file your returns and explain to the government how you managed to not pay tax this year. Unfortunately, we've run out of time. I want to thank both Mayur and Suresh for spending time with us and answering those questions. You've been very, very helpful, and we're going to continue to answer questions right through the next 2 weeks. Join us tomorrow at 6:30 when we take your personal finance questions. So the number's at the top of your screen. If you have a question at all about tax, about finance, about real estate, pick up the phone and call us. It'll be our pleasure to help you. Thanks for watching.
Find us on Facebook at facebook.com/etnow and don't forget to click the like button. You can also follow us on Twitter at etnowlive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/etnow.